Very good morning, everybody. Today is Sunday. Let us understand the golden market structure. I usually refer it by GST, golden structure trading. Mark my word, we have been publishing 20th consecutive win in the row in the month of September and October. We are left with another 2 weeks to trade, and entirely 20th win we have executed in the Bank Nifty. Okay, and this is how the market will be trying to work out its way when it is in the bullish mode. All right, start looking for a rally upside with the higher highs and the higher lows. So market making its moves upside, we always wait for some kind of exhaustion, and that is defined by the third peak. All right, so you can see all higher highs, and this is the third peak. And we recognize the third peak when it takes out the low of the second peak. And then below we have one peak for our reference. Okay. So this is the break in a structure. Once the low has been taken out, we wait for market to make its way up on this price area of level 2. Now understand that a market, when it channelizes itself in a bullish mode, it will try to come and retest this high. Probably may not go past this high, but he may be retesting this area of engulfing, which is nothing but your supply zone, right? So anything between 3 and 2, I would like market to give me 3 consecutive tests. All right. This is 1, this is 2, this is 3. On the third attempt, these 2 attempts should have not taken out the high of the 3 peak formation and probably maintaining the low of the breakdown structure after the peak formation of 3. Okay. So if this is intact, market doesn't go below that. It's a very ideal scenario. This is a very textbook example I'm telling you. This is how it should be working out. If it works between this third high and this swing low and gives us the 3 touches on the zone of second high, look for candlestick pattern to go selling from this place. We want our pin bar to appear. We want a single candle engulf without taking out the high of the previous rejection candle. The moment one of this candle appears, it's 80% of the time you'll get this. Your first target is always the first swing low after the break of the structure. You go selling on this and your first target is this. Your stop loss goes above the pin bar high. Okay, market will make its working towards down, trying to take out entire liquidity while he was making going up. We have never missed the first target. This is our target 1, and rest of all the swing lows become your consecutive targets. We have never missed the target 1 till today. From the time I've been posting the videos, it's 100% achievable. Post reaching the first target, you start trailing your stop losses in a very effective manner, such that whenever the market tries to change its direction from any of these levels, maybe let's say from this level, all right, you should be able to come out with your rest of 20% of your account size. So if you are going 4 to 5 lots at the first place, try to book 80% at the first target. With the remaining 20%, you can just keep trailing it. When it moves back up, tries to take out the swing high, you can come out with a 20% of rest of the account size, right? You will always maintain your profit levels all along. Okay. Now this is on a buy side. Sorry, sell side. So let's see how it works out on the buy side. So market when makes it ways Towards sell side, we see 3 peak formations. The third is confirmed when the high of the second low has been taken out. We want market to come to this area of interest, the low, second low, and then gives us 3 consecutive testing of the zone. On the third one, and after that, we should get a pin hammer with a single candle engulf. You initiate your buy here, your stop loss goes below this. Your first target is always the nearest swing high. This is your target 1, 100% achievable. We do not miss this. And then consecutively, you can trail all the swing highs. Market will not give you exactly the same structure every time when it comes to the entry. There will be variations in the approaching this zone. He may come in a channel form, he may come in a square box trading. Okay, so probably he may, let's say he breaks the second high. This is the third. He may come here and trade in the boxes, takes out people down and up, comes back again, gives you the entry, and then you go up. This is your first, this is your second, right? This is one form of market approaching your level 2. All right. Maybe the another way, as I've told you just now, it may start working way down in a channel form, right? Test your area, then wait here, wait for a structure break again if you want to, and look for your candlestick pattern with engulfing. While doing the testing of this zone, ensure that the market preserve the low of this third formations. It should not take out this low. Probably it can spike down and pulls back in and closes up. This is valid, but there shouldn't be any close and break of that low. Okay. Let us see one example on a gold trading session of Friday. This is how the market has worked out. Before coming to this part, let us see there is a trade before this. This is a 15 minutes of a chart. We see market making consecutive lows here while exhaustion. This low is confirmed. There is a close below that and it takes out the high, swing high of this pull down, second low, right? This is the highest high after the swing low of second swing low. This high has been taken out by this slow movement up, right? So this is your 1 and this is your pullback, the highest high. This is swing low 1. This is another high, comes back down, doesn't make a lower low, makes another high. So between the low and the drop, the highest high is the last pull, right? First drop, second drop. This is the highest high pullback. Third drop takes out this high. We wait for market to come here. Now this is a zone, not a single price area, right? We see the market comes here, makes the first attempt, pulls back, second attempt, pull back, third attempt. See this second attempt, pull back, third attempt. Now these pullbacks could be in the form of a single candle or maybe multiple candles. So probably you can see the market dropping down with this candle and in this zone, pulls back with the 2 bullish candle, trades above with 3 and then drops back again. Another small bullish candle then drops back again, little deeper, right? So 2 to 3 touches, you should get a pin bar. Pin bar closing as close to the high of its body, and then you should get a single candle engulf. Between these 2 candles, we already have a bearish candle. Ideal situation should be this bearish candle should not be there. There should be a bullish engulfing candle without taking a low. But yet, the variations will always work. So you have to get familiar with these variations. Your entry is defined here. Your stop loss is defined here. Your SL goes below the swing low of the spin bar. You enter here and your first target is here. Take for the engulfing to be safer side. Touch that and you drop. Now market has been choppy for all a long time. It took around 124 minutes, around 2 hours to reach this price. Okay. Then there was a drop. The second, we had a sell golden structure setup. After the drop, market has given you three peak formation here on the sell side. One, there is a rally. Second, there is a third one. There is a break in a structure. The low of the second peak high. Market takes out the structure, goes back in. We are interested in this high area. Market should be testing this zone, should not take out the high of this third peak formation. Comes back here, first time pulls back, three candles, second attempt pulls back, third attempt pulls back, fourth, fifth. So you can see multiple after the second attempts. I start looking for my candlesticks entry. So I can see three pushes up. And then whenever I get my candlestick pattern, maybe rejection candle and any other form, I get into the trade. We have an inside bar closing below this bullish bar. High is intact. I go selling below this. This is one form of entry. The second is the break of this neckline. If you are not getting the rejection candle with engulfing with the single one, you can just wait for this neckline to break when you see the step up movement to test this zone. The neckline breaks up, you get your entry done. Stop loss is little more higher. Your target is the swing low after the break of the structure. This is the first one. And then you can go consecutively to the origin of this move. All right. So first we never miss. Market has given a depth. Okay. Maybe probably you would have got stopped out on this bullish vertical move if you are working your way down on a 50% of all these moves. Okay. But your 80% of target is done here first time and moves back of this high, probably 20% will have come out. So start learning the structure in the market. It's very effective. We have not missed our targets up till now. On 20th, we are waiting for it. It may happen sometime, but when it appears, of course, I'm going to share with you. All the best for the Monday. I will try to put some review in the evening, how the stocks or the index may perform on the Monday morning. Thank you so much, guys, and have a nice week.